changes coming to the rental markets in China. Due to the outcry regarding Chinese house prices, President Xi intends to bring about big changes in which will be an attempt to cool the markets in favor of those needing a place to live versus those amassing multiples of property. Why have property prices soared, not just in China, but throughout the developed world? Well, it is simple. Everyone from banks, governments, real estate developers, all want a slice of the action. However, the president aims to dampen down the property gamble by trying to hold back real estate prices. He announced his plan at a speech at Congress in October last year, which he declared favouring renting as opposed to ownership. His plan was to try and do away with tradition whereby families help the firstborn son to buy a property to start a family when married. However, instead, his speech encouraged developers, banks and local governments to gear up their activity in the property markets. The scheme includes property taxes, which will be put into effect over the next several years, aimed at a market in China that has no controls. UK-based property investor Jamie Johnson of FJP Investment has said, China's property market is on the brink of unprecedented change. When we see this pushback, we are starting to see a new model emerge, and this is why we are paying close attention. The fear of inequality due to the property boom is a major concern for the president, and he will see his position being used to find a solution to ever-increasing property prices. However, this is not just China, this is a worldwide problem causing discontent in many countries. Of course, honing in on China, Shanghai is seen as the most cosmopolitan of all of China, and the residential prices are sky high. Appealing to the well-to-do Chinese and the ever-increasing expat communities, Beijing has the same problem. Although this problem is because the younger Chinese do not want to leave the families, but real estate is rising higher and higher. You have to also take into account a system whereby homes have been allocated to employees of companies. Jamie Johnson has said that establishing a lively rental market will help to lessen the risks from irrational housing prices. The university has been involved in carrying out a study that revealed a 1,538% gain in land prices in Beijing from 2004 to 2016. China is in the process of building large rental areas with available funding. We may find that China joins other European countries where owning homes is not an issue, and there are many that are happy to rent for life. If you consider the rental revenues for the size of China's rental markets, it could increase by possibly $650 billion by 2030, according to estimates from FJP Investment. Having tried almost all that is possible to slow the housing market down over recent years, it is still accountable for the Chinese boom or bust economy. Locals do not fully trust the stock markets in China, as the movement of money to other countries is not permitted, so they are using their money to invest in houses, which of course add fuel to the ever-increasing flames of house price rises. Bearing in mind, mortgage loans have increased at an incredible rate over the past few years, not helping the situation that the president is trying to control. To find out more and to hear more about our research, visit our website. It's www.fjpinvestment.co.uk.